All right, joining me now is Steve Moore, FreedomWorks chief economist, committed to unleash prosperity, and the author of Govzilla. Steve, good to see you. So first, I want to get your take on this Joe Biden speech today, saying that his policies have created a manufacturing boom in America. True or false?
Well, we had a manufacturing boom under Donald Trump, actually, and then COVID hit, and so we lost a lot of manufacturing jobs. All we've really done so far, Sean, is recapture the jobs that were destroyed as a result of the lockdowns of the economy during COVID. So, you know, we had a much better manufacturing renaissance under Trump's policies of deregulation, a lower corporate tax rate, and other policies that really advantaged American companies.
You know, I want to talk to you about debt because we have more debt in the third quarter of 2012, largest debt increase since 2007.
Yeah.
A lot of that is from mortgages, but $38 billion of it is from credit card debt.
Yes.
What impact is this going to have on the economy as we looked into the first quarter of 2023 and second quarter of 2023?
Yeah, it's something that really makes me very nervous about the direction of the economy, Sean. I mean, you've had this massive increase in consumer debt. I think the number is close to $1 trillion of outstanding consumer debt, and a lot of that is on the credit card. Now, I don't know about the Duffy household, but I can talk about the Moore household. If we keep running up our credit card month after month after month, we're in some financial trouble. Yeah. And that's kind of what's happening with a lot of families. And then the question is, why is that happening? And I think the answer is pretty obvious, that when you have wages rising at 5% and inflation rising at 8%, people's incomes are falling further and further behind their living standard. And so they have to go further into debt to just maintain the living standard they had, for example, when Trump was president. And that credit card debt, I think, could, on top of the $4 trillion of debt that Biden has added, makes us kind of debt nation right now, and it scares me. I don't want to see another bubble burst like happened in 2008. And I got to say, Sean, another big story that happened today related to this is, did you see that Fannie Mae and Freddie Mac are now going to be insuring $1 million homes? I mean, is that the job of the taxpayer to insure somebody on $1 million home? I don't even understand the logic of that.
Yeah, and we fought that when I was in the Financial Services Committee in the House, but they keep upping these numbers. But, you know, we were talking yesterday on the show that Americans are spending a lot more money for the holiday season. They're out shopping using their credit cards. And I wonder, again, this is not just for the necessities. This is not just, increased costs at the grocery store or increased costs at the gas pump. They're buying presents. So I wonder, does the American consumer feel pretty optimistic about, what's coming in the American economy and what's coming in regard to inflation? Or is something else happening here? Because it wouldn't make any sense unless they feel like things are going to get better.
You know, it's hard to get at the psychology of the American shopper. Yeah. But I will say this, what we've done in the recent years is that we keep, every time there's any kind of trouble, we just flood the economy with money. And I think there's a sense out there of a lot of Americans that they're just entitled to another big tidal wave of money in their pockets and in their bank accounts from the government if they get in any trouble. This is a classic moral hazard problem, because we're kind of rewarding the same kind of overspending problem. We've got to be investing. We've got to be building. We've got to get Americans back to work, Sean. We're missing 4 million Americans from the workforce, in part because of all of these government payments that we're just shipping out to people without working. It's
not just the American consumer debt. You recall this because I worked with you when I was in Congress. When Paul Ryan came out with a pathway to prosperity in 2010, I think we were at $18 trillion in debt when he did that. Again, we're going to have this debt bomb on our horizon unless we dealt with it. But the Congress has continued to spend. We're at $30+ trillion in debt right now. What impact does that have on the economy in conjunction with all the consumer debt?
So I'm kind of with Larry Kudlow on this. Debt in and of itself, Sean, is not a problem. I mean, if you have a debt to grow a business, if you borrow for that, or borrow to buy a home and improve the home, that's the good borrowing. You're kind of investing in an asset. The problem is, if you look at the things that Joe Biden is borrowing money for, I mean, windmills, really? I mean, are we going to build this economy on windmills and more transfer payments to people, more Medicaid more unemployment insurance benefits. Those are things that don't add anything to the economy, and yet we're going to have to pay that debt back. So my big concern, and by the way, look, you're an expert on this, Sean. Look at what we've done to our military.
That's right.
We've hollowed out our military while we're spending all this money on these domestic social programs.
You know, even on the infrastructure bill, we need infrastructure, roads and bridges and airports.
Right.
But a very small part of that goes to actual infrastructure, and a lot of it goes to these, green new energy proposals that Democrats are so hot on right now. But I want to switch gears with you, Steve, because I want to talk about the child tax credit. Steve Hodge of the Tax Foundation introduced it back in the 90s, and he's now coming out and saying, listen, this may not have been the best idea. Take a listen.
This is kind of a classic case of good intentions leading to unintended consequences. And as you say, this started out as a very small child tax credit, $500, and it's now morphed into this $120 billion a year income transfer program.
Steve, your take. Do you agree with Hodge?
The child credit was sort of a good idea at a little amount, but what we're doing right now, when you add the child credit on top of unemployment benefits, food stamps, we are paying people not to work. This is kind of the cancer cell of the American economy right now. We've got to attach income to work, not income to government, and that's what we've done. And it's had a really negative effect. When you look at the decline in the labor force participation rate, we're going to get a new report out on Friday on that number. But I anticipate we're going to see a continuing decline in labor force participation because the government is providing so much free money to people. It's almost like, I call it helicopter money, just money we're dropping out of the windows of helicopters. And that parade won't continue for a long time without an unhappy ending.
But Steve, doesn't it create a social ill when you have almost half of the tax filers in America that don't pay income tax? So they can say, listen, I'm not paying for all of these services that I want the government to perform. And so have at it, because Steve Moore is going to pay, or Larry Kudlow is going to pay. I'm not going to pay. But if we're all, hauling the wagon, towing the wagon and paying taxes, people might be a little more responsible with how the government spends that money, spends their money, but half don't pay.
Yeah, I've always been troubled by that over half of Americans now are basically paying no income tax. Now, you've known me, Sean, a long time. I'm not for people paying higher taxes, but I think everybody should have some skin in the game, even if it's only paying $100 of income tax. A lot of people are getting actually rebates on their income tax because of the earned income credit. So it's almost a cash payment program, not a program that you pay money into. So I agree with that. Let's have a very broad-based tax system, low rates, so that everybody's kind of paying their fair share, but you are incentivizing enterprise and work.
And just quickly,
it's not complicated.
No, it's not complicated. And you know what? Kids are expensive. I can attest to that. I have 9 of them, right? And the idea of giving, each, family $500 per child, that's the way it started. Went to then $1,000 per child, $2,000 per child. We're now up, if you're under 6 years old, you can get $3,600 as a tax credit. You can get paid, throughout the year, every month for having kids. And again, I agree with you. This creates a disincentive to work, and it's a problem that, again, maybe a good idea that has just gone off the rails. Final word to you, 30 seconds.
Couldn't agree more. But no, Sean, I think you have a lot of kids, don't you? So
yeah.
you're benefiting from this program. You and Rachel.
I don't think I am. They kick me out of it, Steve. But if I was, I'd be maybe a little more fine with it. But again, good ideas that go off the rails and create problems. Steve Moore, always a pleasure. Thanks for joining me.
Thank you.